Hello and welcome to my March property update. Today I'm talking to you from Kew, one of London's greenest boroughs with the river. World famous Kew Gardens just behind me, and Kew Palace is also in there, and Richmond just down the road. Spring is nearly here and I just came out of Kew Gardens and I can tell you it's looking beautiful with its spectacular flora and fauna springing back into life after a really cold winter. Kew's also home to Maids of Honour, one of London's hidden gems. It's one of the oldest tea shops dating back to 1860, still serving their famous Maids of Honour tarts. The UK has seen some welcome good news over the last few weeks in terms of both the economy and the London property market. In January, the UK economy defied gloomy expectations, growing at the higher than expected rate of 0.3%. Meanwhile, London house prices appear to be standing firm despite recent interest rate rises. Land Registry data showed the average cost of a London property remained broadly unchanged in December, up just £188 at £543,099. That's a rise of just 0.03%. It seems that mortgage rates have peaked, so at last there's light at the end of the tunnel. This in turn is bringing renewed confidence to investors and home buyers, underpinning house prices and again demonstrating the resilience of London property as a long-term asset. I and my fellow director Anita Mehra returned a couple of weeks ago from our first overseas trip this year. We visited Dubai, Bangkok, Hong Kong twice, and we love it so much, as I had to do 2 talks there. One of them was at the Barclay Group Spring Into Action event, which is the largest property event ever, and it amazed me, even me, with the number of sales achieved. As many of you know, we work closely with the Barclay Group, have 10 offices in their London developments and 2 more planned at Grand Union, which will open in the next couple of months, and at the Green Quarter in Southall later in the year. During our trip, we encountered a renewed sense of positivity everywhere, and many investors expressed their intention to expand their London property portfolios. Property management, of course, is a key factor for professional landlords, and our furnishings, letting, property management and tax return services were a key topic of interest for those looking to maximise the efficiency and profitability of their London investments. Several new developments are launching right now, and among those that really stand out is West Hampstead Central. It's a boutique development in West Hampstead that we really welcome in an area that is so short of new builds. There's also Aspen in Canary Wharf, which will be Canary Wharf's second tallest residential building. One Cluny Mews in Earl's Court in the Royal Borough of Kensington and Chelsea is also launching. Plus, there's the launch of our exclusive offering of a 5% net yield for some of Barratt London's developments. And when I say net, I mean for a whole year. You get 5% of the purchase price with no costs whatsoever. And that includes us throwing in a furniture pack for you. So, demand from international buyers is forging ahead, although domestic buyers are a little more cautious at the moment. Interest rate rises and domestic cost of living concerns are having an impact, and our London sales teams are busy carrying out viewings, although buyers are more cautious, taking their time deciding whether to make an offer on a property or not. Turning to the rental market, well, as I've been going on and on about the last few months, rental demand remains red hot. Competition continues to be super high at all of our branches, with an average of 32 applicants for every available property. Rents continue to increase due to supply and demand issues, and I'm confident this year we'll see increases of around 6%. Here in Kew, there's very little availability, and we're seeing 85% of our tenants opting to pay an increase and renew for another year. Thankfully, we are seeing some new homes completing, including at White City Living, where our on-site office has been literally inundated with applicants. One beds have been achieving as much as £650 per week. That's almost £100 per week higher than a year ago. The same is also the case with the new phase at Fulham Reach in Hammersmith, where rents are way up on last year and people are literally waiting for the next completion. Traditional areas like Kew, as I said, Hampstead, Highgate and Kensington have the least amount of stock, which has led to some pretty fierce fighting. In East London, Royal Arsenal Riverside and Woolwich continues to be super popular due to the river location and the Elizabeth line. In a nutshell, demand for a home in London, whether to buy or to rent, remains undiminished. The market for both is fast moving, so please do get in touch if you want to buy, let or sell for our expert local knowledge. Thanks very much for watching me today from here in Kew outside the Gardens, and I'll be back next month with another update. And now, I'm off to Maids of Honour for one of their famous tarts.